All right, guys, welcome back to another video from Primetime Pips. My name is Brian. I'm actually the CEO of Primetime Pips. And today, I actually want to go over my webcam. I don't know what's going on with this thing, but it's not working. But today, we're going to go over the best trading plan that almost everybody should have or adhere to. Just for the simple fact that this is going to be one of the best ways to make consistent profits in the market just by having a trading plan. Guys, if it's anything that's the most important, it's not your entries, your exits, none of that, because all of that can go wrong. It's about your trading plan and your risk management. Okay? So right now, just speaking to you directly, the person watching this video, what is your trading plan? Are you able to pause this video and tell me your trading plan in the comments? If not, you should probably keep watching this video just to see how you would even create a trading plan for yourself. Okay, and if you do, like I said, put it in the comments. I would love to see, trading plan. How much do you risk? What do you look for in the market every single time? But when it comes down to a trading plan, if you stick to it, when you make a trading plan, you don't, do something different one day or use a bigger lot size than what you're supposed to the other day. You have to stick to this trading plan literally like step by step. Okay. And after this video, I would love it. Even if you guys want to contact me, even on Instagram, my Instagram handle is intellectual_CEO. I should put it on the screen somewhere. If it's not, that's what it is, or it'll be in the description below, actually, if you want to contact me about any questions regarding your trading plan whatsoever. So this is a trade that we see right here on the screen that I've taken with my students. So with my students, I do live sessions every morning. We take these trades. I call out the market every week before the market opens to see my directional bias on where the trade charts are usually going, and normally they're pretty accurate every week. Of course, I can be wrong too. I am not a guru about the market, but I am consistent. So given that, with this trade, one thing that you want to include inside of your trading plan is a 1-to-3 risk reward ratio. Okay, some people are like, oh, what about a 1-to-2? I even seen people on YouTube talking about, oh, a 1-to-1 is good too. No, it's literally not. Even if you break down the numbers the correct way, a 1-to-1 is not good whatsoever. Okay, because let's just say, for instance, right? Let me see if I have another trade that we did. Let's see. Yeah, okay, perfect. All right, this was a trade from last week as well. All right. Oh. There we go. All right, so from this trade last week, I want to show you guys why this risk reward thing is important. All right. So I'm going to take a little box here, and I'm going to make it the same size of my stop loss. Okay. Because that is technically what? Our risk reward ratio, correct? Good. Let me close all this stuff. My computer is acting really slow. Perfect. All right. So I made that box the same size as my stop loss, which was 7 pips in this case. This was a New York session trade early in the morning when we normally hop on a live session to take trades. This was the entry that I wanted, and we got it. It didn't hit my stop loss whatsoever, which was great, and I was able to use a bigger lot size because my stop loss was lower. So with this box that I've made, That represents that 1 out of, what is this? This is a 1 to 12 risk reward ratio, okay? Which is nuts. I don't always get a 1 to 12, okay? But I do get it from time to time. So with this, so this represents our 1 risk here, right? From our 1 to 12. The 7 pips represents our 1. So I use 2% per trade. I used to use 3. When I first started trading, I used to use way too much, like 20 to 30% of my account, and that's how I used to blow them when I first started. But now that I use 2%, it's a lot better, and I feel more comfortable letting trades ride for a pretty long time. So if we're looking at this and we put that there, remember I'm using 2%. This box, if it hits my stop loss, I lost 2% of my account. So the 7 pips is still costing me 2%, no matter what, 2% every single trade. If my stop loss was 80 pips, I'm using 2% of my account for those 80 pips. Okay, but obviously the lower the pip count on your stop loss, the higher the lot size that you're able to use. So if I keep on adding these, all right, so we're up 2%. There's 4% there. There's 6%. 8. 10. 12, 14. I think this is the last one. I'm not going to keep going just for time's sake. I don't want the video to be too long, but you guys get the picture. In total, 12, all you do is 2 times 12 is 24% that I've grown from 1 trade, okay? So if we have, I'm going to put 2% in here. Trying to make this visual for the visual learners that are watching this. So we got 2% stop loss. Just so I don't lose you guys and you guys understand exactly why this is important to know. I'm sorry if I start mumbling. Sometimes I just get to talking a little too low and it sounds like I'm mumbling at times. But if you guys do want to learn more about this and how I teach, I do private lessons for people. All right. So with this, I didn't go all the way down. But with this, if I have 24% all the way down, right, some people will look at you. And I've had people on YouTube, I'm not going to say any names or anything. I've been in almost everybody's course, known the man that you can possibly find, any big name. I've been in it. But a lot of the times you find when people say, oh, okay, you're at least looking for 8% growth, 10% growth in your account per month, which is fine. If you're getting that type of return per month every year, that's 100% back on your return. That's better than any bank is going to get you. But that's playing it in a way where you're probably swing trading. Your stop loss is probably 190, 80 pips. Your stop loss is huge. My stop loss is on all the trades that I do. Like I said, if you guys don't follow me on IG, I post these trades every morning when I get up and I trade. I'm going live with it. I'm going to start going live on YouTube in the morning when I trade, so you guys can follow along with these also. But when it boils down to your return and being consistently profitable, if this 1 to 12 risk reward ratio, I let this trade play out and do its thing, 2%, that's 24%. But what 1 to 12 lets me know is that I would have to lose, if I'm using the same risk because of my trading plan, I would have to lose 12 times in a row to erase this 1 win. And I know me, I'm not losing 12 times in a row, especially if you guys already have a strategy in place for entering your trades and exiting. But I know I'm not losing 12 times in a row. This is why I stress the 1 to 3 plus risk reward rule. And I don't understand why people would even say 1 to 1 is the best case. It's really not. That doesn't allow you to be able to lose. With a 1 to 3 risk reward ratio, you could be 30% accurate. 30% accurate in the market, guys, and still make money. Okay, I have a full video inside of my courses that go more in depth about the calculations and breaking all of this down. But literally, if you're doing a 1 to 3 every single time for every single trade, you could be 30% correct. So a lot of people who are afraid to lose, like, no, I got to be accurate all the time. There's people who are very accurate. Then they over leverage on that one trade and lose everything that they just earned. Accuracy doesn't mean anything to me. What's your portfolio growth? All right. But when people say 1 to 1 is the thing, and I can't stress this enough. This is why I'm back making videos on YouTube, is because when I seen it, I'm like, what the hell? Why would you tell somebody to do a 1 to 1? And this is multiple companies that will say this. Oh, why are you telling people to do a 1 on 1 when if they win, that one loss is taking that out? And then what if they go on a 3-loss streak or 4-loss streak? They have to make all that back up with winning trades. Instead of doing a 1 to 3 where you can lose twice and you win once, you still came out profitable. Right? Or if you win once and you lose 4 times and then you win again, you're still profitable. It makes sense for people to be doing a 1 to 3 risk reward ratio. Okay, that's part 1 of this video, is the risk reward ratio. That's and I wanted to break it down like this so you can see 2% of your account, 2%. It is very possible to get 50% per month on your account. I hate when other people say this, that it's not. You only get 8% per month. Those are people who trade very passively. I don't even trade that aggressive. This is one trade that's 24%. I don't trade that aggressive. If I don't see a trade in the morning or London session, I'm out. I don't trade anything. And that's one of the pieces of discipline that you guys need to have too. If you don't see anything, don't trade it. Don't trade for that day. Just sit back, sit on your hands, just watch what the market does, and then plan to trade for that next day. Okay? So now we have risk reward. So at minimum, our risk reward needs to be what? A 1 to 3. At minimum. And you guys know why. If you missed it, rewind, please. Now, you have to have a goal. Now, if you are watching this and you guys are just starting because you're wondering how to be consistently profitable, if you're just starting, give a realistic percentage goal on where you would like to hit. Because if you're just starting, you probably don't have a strategy figured out yet. I would say 10%. 10% is a reasonable goal for an entire month. That's 30 days for you to figure something out and make plenty of trades in between those 30. Right? So if you got 6 to 10% as a beginner, if you've already been trading and you know kind of what you're doing with like the strategy wise, but for some odd reason you're still coming out negative, what you want to do is you want to give yourself, like I said, risk reward ratio. That probably helped a lot of people by itself, but also you want to give yourself a realistic goal to hit per month that you know that you can hit. And once you hit that goal, stop. Unless you see something bread and butter after you hit your goal, you're like, I know this is it. Go right ahead. If all your confirmations line up, because you should have 3 or more confirmations before you take any trade. But if everything's adding up after you hit your goal, go right ahead. But you should have a solid goal of, even if it's 20% a month. So let's say this is Forex 21. I showed my students this. I haven't really seen it too much online on YouTube. There's not too many people talk about risk management and how that can really help you guys. Like I lost my whole entire first year. Like I was not profitable at all my first year. It was horrible. And then once I implemented risk management and being patient and disciplined with taking my trades, it got a shit ton better. So going to Forex 21, if we have a starting balance of, let's say, because not everybody has a lot of money, right? Let's say with $1,000, and you do 20% per month. Let me make sure it's 20%. And we're going to do 5 years, right? We're creating a 5-year plan, a future plan for ourselves. So I want you to look at this. We're going to look at this together, right? First 12 months, at the end of the 12 months, you have $8,900. If you do at least 20% per month from that 1,000, you'll have $8,900 in that account. A lot of people are like, okay, I made, almost $9,000 my first year. That's really not nothing. Even though they don't have $9,000 in their savings account, that's what people will say to you. But on your first year is going to be your lowest year when it comes down to making money. So get it through your head. People who have been informed that this is a get rich quick. It's not. I mean, half people gotten rich quick and hit lucky on one trade and they over leveraged and made a lot of money. By all means, yes, people have done that for sure. But for your sake, so you don't lose money like I did my entire first year. I mean, I made it all back and then a shit ton more now. But for those of you who are just starting or are still inconsistent, make a plan. Like I have my students print this out, right? Your first year is going to be your weakest. And then come 24 months, in 2 years, you're at 79,000, guys. In 2 years, your second year, you made 70 grand just by doing 20% per month. Now those numbers are looking a bit better, right? You're like, oh, okay, yeah, that's 20%. That's kind of nuts. Now we're at 70-something thousand. I'll probably quit my job, right? That's what a lot of you would think. I'll probably quit and just start doing whatever it is I want to do at that point. I want to go to 3 years now. So the 3-year mark down here, that's $708,000. Name a 401k, a Roth IRA, anything that the government gives you that's making you that type of return. If you are consistently doing 20%, 1 to 3 risk to reward ratios or more, where you can allow yourself to lose and feel comfortable with losing because you know that you can make it right back in one trade. These two together, knowing your plan, is ridiculous. And the reason why I did a 5-year plan, because if you sit there and, of course, your first year, maybe your first 2 years, when you start doing a plan like this, yeah, go work a 9 to 5. Go work a 9 to 5. You have to survive somehow. Go work a 9 to 5 and watch your account just build up as you keep going. 20% every time. Now, if we go to our 4th year, 48, we're at $6.3 million. Your 4th year. And at the end, you're at $56.3 million. Just by doing the same 20%. You see how it just keeps getting higher and higher, just keep compounding, right? At the beginning, we started off slow. We're like, man, this is barely any money. You get past your first year, your second year is a lot better. You get past your 3rd year, it's a lot better. Now, a lot of people may ask, okay, go to Forex 21, guys. Go to free tools and Forex compounding calculator. I could have put $500 here and did 20% per month. And you see your first year is $4,400. Your second year is $39,000, guys. You're already making good money on your second year. Your 3rd year, you're still a 6-figure earner now. So, guys, you take your time when it comes down to creating your trading plan, how much you want to risk, your risk-reward ratio, and literally determine your lot size. There's plenty of tools that you can use to determine your lot size. MyFX book has a calculator, a position calculator that you guys can use if you go to myfxbook.com and then go to position calculator. You should be able to actually put everything in right there. I'm going to it now so you guys can see it. If it can load up for me. It's time for a new computer. So we have account size of $1,000. and our risk reward ratio, our risk percentage is 2%. And let's say we had a stop loss of, it was 7 pips. I'm just going to put 8 pips for that. We're going to calculate that. So at $1,000 in my account with a 8 pip stop loss, I'm able to do a 0.25 lot. I'm risking $20 of my account, but I'm able to do a 0.25 lots. And I think, let's just say, what was it? 80 something pips, I think. That's over $160. If that trade, which went right, this one went right, that's $160, but you're risking 20 off $1,000 account, right? You made plenty of money in percentage on that day. You can make your 20% in 2 or 3 trades and be done. Like, okay, cool, I hit my 20%. I'm gonna relax until I see something that is really popping out at me. Like I said, if you don't see anything, don't do it. Okay, so this is where I'm starting back up making all these videos every day, every morning. It's just to get people's minds right, because so many people come to me from different places, especially our Markets Live. I get a lot of people that come to me from there. That's for damn sure. That are not getting taught this simple thing, and there may be a lot of people that watch this video that may start teaching risk management in this way. But if you guys want to learn more about risk management and managing a position, because you have to learn how to manage your position too, guys, like there's plenty of tools that you guys can use. If you guys want to become a student, just look in the description below. I do have a free course for you guys, especially if you're a beginner. If you've been trading, that free course may not help you too much. But I do have a free course for you guys, for those of you who do want to learn, who want to see my teaching style. I'm raw. I curse a lot. I'm sorry. But I just want to make sure that I keep it real and always present myself as me. Okay? Other than that, guys, that's it for this video. I made it a little bit too long for myself. I don't want you guys being bored out your mind watching this. But if you trade Forex, you're, a boring individual, because that's boring. Other than that, guys, you have any questions, please put it in the comments. I do have a free trial with me, a 3-day free trial where you can actually learn from me a little bit and take advantage of that. If not, guys, I will see you in the next video tomorrow morning. Hopefully I'll be able to do a live stream tomorrow also, and we could talk more about the market then. All right, guys.